All right. Good morning, trade pros. Welcome to Morning Market Update. It is Wednesday, May 6th of 2020. This is George Papsov, Trade Pro Academy. You guys are having a phenomenal day. I certainly am. Okay, we've had a good morning so far. We put a book or a trade in the book already off of these ADP numbers. Red, good morning. And we're also coming live from Toronto, Canada, actually. I don't know if you know that, but welcome aboard. Everyone on YouTube, welcome. Rizvan, see you on here too. You're on YouTube and in the webinar. You guys are, wow, impressive people. So happy to be able to work with such awesome people. All right. Sorry, you got to see the background. There's a whole trading setup here in front of me, but I don't know why I've gotten lazy. I'm just sitting here nowadays and you're facing the wrong way. I wish you could see what's going on this way. But anywho, let's get into it. Today is the 10th anniversary of the flash crash. Okay, when the Dow Jones Industrial Average plunged nearly 1,000 points in a mere minutes. It erased $1 trillion of market value only for the index to rebound just as quickly. It's 2020. This happened in 2010 on May the 6th. I got to wind up my watch. It's still showing the 5th on there. Does it really matter, though, with this corona lockdown? Who cares what day it really is? All right. This morning at 8:36, the United States Treasury said that they are going to refinance with $96 billion of treasuries in the next quarter. They gave a rundown of 3, 10, and 30-year bonds and their purchase or their issuance amounts. They're much higher than before. All right. And, there's the fact that there's no 4 or 6-year treasury that's going to be issued indicates, steepening curve is going to continue. Low end rates are going to be low. Longer term rates are going to be a little bit higher. They're going to steepen the curve. All right. That's the idea. It's an interesting report. We could dig really deep into this. There's actually a lot of complexity and depth, but let's just leave it there. The U.S. is planning to issue more bonds to generate capital. All right. We know that because there's a lot of debt that was printed, a lot of money that was created, so that debt has to be monetized. All right. So analysts see the deficit for this year passing $4 trillion in the United States. Initially, pre-corona, it was around $1 trillion, the idea. I was so clumsy today. So that's 4 times more than the $1 trillion. All right, and then they also are expecting massive bond issuances every quarter into 2021. So for the rest of 2020, you're going to see a lot more bonds being issued as capital needs to be raised. All right, this morning also, oh, by the way, I want to mention something on that. Jeffrey Gunlock said something very interesting yesterday on Twitter. I laughed. And I said, you know what? That's actually a really good point. He runs Double Line Capital, Jeffrey Gunlock, and so he tweeted. He said, "Look, I think that was something like $6 trillion balance sheet now with the Fed. So much money's been created by the government, right? If you guys could print all this money with, and what is the Treasury said? The Fed rather, they've said we have no upper limit. We'll provide quantitative easing until it's needed and necessary to get over this. QE infinity, they call it now. There's QE 1, 2, 3, 4 throughout the 2009 crash till now, and now there's QE infinity, meaning we'll support the market." So he goes, Jeffrey Gunlock said, look, if you could print all this money without any boundary, without wit's end, and you just print an abundant and limitless amount of money, why are we paying tax? And that blew my freaking mind, all right? Because, I've been in this industry a long time, and those are the kind of questions that I like to ask. So I'm going to email Jeffrey, and we're going to get together for a quarantine dinner, because that's awesome. I got to talk to him about that. It's a great point, right? Why pay tax? You can print all this money. What's the point? And so General Motors this morning also released earnings. To no one's surprise, they bombed. 17 cents earnings per share, expected 62. They say, the revenue didn't do too bad, though. 32.7 billion, 31.12. To be honest, this is the first time I'm looking at the numbers as well. I know that they didn't do great, but they didn't do bad either. Says that in China, following their strongest sales impact in February, the industry started to pick up in March, narrowing monthly sales decline. So that's a positive. All right, for General Motors, say, hey, look, we're seeing a little bit more activity in China. This is kind of the model that we're looking forward to in North America, having gotten the virus after China and now being in the end of it, or the declining stage, hopefully, fingers crossed, of this corona nonsense. All right, so that's General Motors. They also said they've been working with suppliers, including those in Mexico, towards a May 18th restart target date for the production facilities. So that's kind of positive news. Airbnb this morning, not so positive news. That was yesterday. Oh, Oh my God, it's smoking. Call 911. Ah. Just kidding. It's a diffuser. This is what smoking. Take a whiff of that peppermint goodness. Actually, this is spruce. This is spruce. There you go, YouTube. You get some spruce in those lungs. All right. Airbnb is cutting 1,900 jobs, 1,900 jobs, about 25% of its workforce. Pretty crummy for a company that expected to go IPO this year. So we're going to assume the IPO is not happening. 1,900 jobs are getting cut. All right, I'm actually tracking this Airbnb situation very closely because this means, think about this. I was going to go on a podcast. I'm not going to slander anybody or mention any names. I was going to go on a podcast to talk about cash flow and this guy that encourages people to max out their leverage and buy Airbnb properties and then rent them out. All right, basically become a hotel is what he was encouraging people to do. And I had a lot of questions, and I decided not to go on that podcast. Like, I don't really believe in that aggressive. Anywho, point I'm making is I was worried about this before this happened, and now we got a lot of people who've maxed out credit to purchase multiple properties for Airbnb income, not getting the income. All right. So what could happen, especially with countries like Canada banning short-term rentals, right? Literally, there's no Airbnb sales because you can't do it according to law. And so now that there are no Airbnb short-term rentals and no short-term supply, these units, mostly condos, by the way, in Canada, Toronto's like condo city, everything's going vertical. All these units are going to hit the market as supply potentially to be sold. Keeping a close eye on this, right? But I'm going to show you something conflicting that's actually showing that we're rebounding in just a moment as well. All right, Tuesday's key earnings are yesterday. Electronic Arts down 4.6%. All right, Beyond Meat is up 4.8. Surprise profit really took investors aback, and it rallied. Disney is down 2%. Huge COVID-19 hit. They're suspending their dividend, and that's where we're at. Overnight, Hong Kong is up 1.1. Japan is still closed. Hong Kong returns today from their 5-day Labor Day slumber. China's up 0.6. India up 0.8. In Europe at midday, London's up 0.4%. Paris is down 0.3. Frankfurt flat. And in the morning here in the U.S., we had some gains. We lost them from ADP. Now we're recovering. Okay, crude oil's up 3.2. Quite a rally yesterday on crude oil. Gold is more or less flat. Bitcoin's flat as well in this morning session. Here's the interesting part. More properties for me. I actually pretty much think if the market's going to drop from here in the housing market, it's going to do it. And I bought my latest property at the peak. Literally, I bought the top. Okay, but here's the thing: you can't time a housing market like you could a stock market. And there isn't anyone who could have predicted this pandemic. I already had put the agreement. It became conditions were lifted. It was binding, and I have to follow through on my deals. So, anywho, I added another one. That's okay. And the thing about property is the property game. If you're gonna get multiple properties, right, the calculation you need to do is 100% payment for all the mortgages of the 3 for 6 months minimum in a bank account that you can't touch. All right, and like, what's the fear? Okay, things could get worse with this coronavirus. Now my rule is going to be 9 months, 12 months after this situation. But I ain't worried at all. I'm prepared. All right, so today's economic calendar at 7 a.m. we had mortgage applications. It was interesting. 30-year mortgage rate went up down 3.4% versus 3.43 prior. Here's the interesting part, though. Mortgage applications in the U.S. are up 0.1%. When you look at the previous number of minus 3.3, it means we had a 3.4% increase in mortgage activity. Okay, meaning that more people are jumping in to get loans, and I could confirm that going through these transactions on the property which closes tomorrow. For me personally, going through these, my mortgage broker said, look, George, there's actually more demand for mortgages right now. People are using this downtime to fill out an application, send in all the paperwork, all right, and be prepared to put in firm offers when showings start again. There's a lot of people need to move. They're having families, jobs are changing, they have to buy property, all right? And so to get that property, they have to view it. I wouldn't buy a property with a remote viewing. Hey, here's the kitchen. What do you think? The phone like pans away and the drawers fall off. Oops. You didn't see that during your viewing? So he was saying there's a lot of applications. I got to thinking, I'm like, interesting, all this free money that flowed into the market. Once we get over this coronavirus fear and there's a chance that in the summer it just goes away, fingers crossed. I'm an optimist. Call me a fool if you want, but that's the only way I see things, glass half full. If it goes away in the summer, there's a vaccine, we're going to see a big rebound with all this free money. It's going to take hold. It's kind of like going to the dentist and your tooth hurts. Like, oh my God, it's so bad. It's so bad. And they put that Novocaine injection. Then you're like, oh, what a relief, right? It's not that your tooth doesn't hurt anymore. You just don't feel it. You're numb to it. I think that's what the stimulus is going to do. It's going to make us numb to the economy, and we're going to just continue upward. That's the optimistic scenario. Anyways, so mortgage applications are up. Mortgage refinances, naturally, they're down 38.35 to 39.01. No one wants to refinance with a lower value. And that's it. The mortgage market was surprising this morning. I think that's a pretty positive thing. ADP, not so positive. All right. So ADP is a payroll processing company, okay? And they have their own economic report. Here's the interesting part. There was an expectation of minus 20.05 million jobs, 20 million jobs lost. And it came out of minus 20.036 or something. We're pretty much right on the nose. And we were talking about this in trading room early, and I'm like, look, that's a big number. But we already knew that. Okay, there was 26 million plus jobs in the United States that were lost on the initial jobless claims in the last 6 weeks. So we knew April was going to be crap. All right. We also know why those jobs are lost. It's not like that's a surprise to anybody. You could stop somebody on the street and first of all, ask them, why are you on the street? Second of all, tell them, hey, how many jobs do you think? If I told you that there was a job loss of an enormous quantity you've never seen in your life, would you be shocked? And most people would say no. They'd be like, dude, look around you, right? No, duh. So, yeah, it's a big number. It's disgusting. It's a big print. It is double the amount that was lost in the entire 2008 and 2009 recession in 1 month. Okay. So actually more than double, like 150% of the entire last recession was lost in 1 month. Okay. Make no mistake, this is a disgusting number. It's very bad. Why isn't the market down 100 points? Because the market was already down 36%. This is already factored into the price. I was telling somebody this morning, there's 3 things you got to watch for. What economists expect. The economists don't put their own capital. They get paid for forecasts, not for trades, right? And what the stock market expects and what the stock market is already priced in. And those are the 3 things that counterbalance every time. That's why it's not as simple as headline number beats good, headline number misses bad. It's not that easy. Okay. What you got to know is, yes, a really big jobs print. I think this Friday we have a really big loss as well on non-farm payrolls, but that's expected. We're not really looking at the headline number. We're looking at the constituents below. And as a humanity, we've been primed to look forward. We know this quarter is going to be bad. We also know Q2 is going to be terrible. GDP, everything on Q2 is going to be terrible. But if we start to get back out there, get to jobs, restart the economy, we're going to be forward looking very quickly. Okay. One of the saving graces of this pandemic is that it was unexpected and it was widespread. And that sounds crazy to call that a positive, but it means nobody's really surprised with the negative outcome. Right? It's expected, it's baked in. So be careful getting a hard-headed idea of saying, I'm going to start selling because ADP printed negative. Minus 20 million jobs. Why isn't the market going down? Sell, stop, sell, stop, sell, stop all the time. So you say, you know what, screw it, I'm going to buy this thing. And then it dumps. Don't fight City Hall. Don't fight the Fed. Right? Don't fight the market. You might not understand it, but you don't need to justify the price. You just need to trade it. All right? That's what I got to tell you. 8:30, we also had Treasury refunding. We talked about that. 10:30, today we have the oil inventories. Holy smokes, it's going to be a great day. And then 1:30, we have Fed's Bostic speaking. So look around. Look out. We have some volatility this morning and also from the oil report. And that's what I got for you guys. I'm going to take some very quick comments here. Q's get or 220. What about the 25,000 you had in a quarter? Yeah, 25,000 here, Mike. You have 25,000 there, and things get pretty soon. We're talking about real money, right? Ali, thank you for valuable information. I really like the way you explain. You're most welcome, Valley. You're welcome. All right, guys, love you on YouTube. Be careful. Got to open this up for oil. Love you all. We're going to head over to Trade Room. See you guys there. Appreciate you all. Have a great rest of your day. Be safe. And I just want to take some extra time to explain a few things to you. Hope you enjoyed it. If you did, click the like button on YouTube, please. It helps us. And, we're here for you every morning. click that little like button. If you're new, subscribe to the channel. See you guys later. Peace out. All right, Atlanta.